Morning traders. Let's take a look. Dollar breached that 105.5 15th of June high. We're surging now, 106 in sight, 106.5, 107 as well in play if we were to breach 106. Obviously, RSI has just crept into overbought territory. However, importantly, we've still got around 15 points higher to move on the upside before extreme overbought territory sets in. On the downside, 21-day exponential moving average 50 at around 103.3. There's a bit of range support here, so those will be key levels to watch. US 500, RSI is making lower highs, looks to be heading south. 21-day exponential moving average capping those gains. I'll be looking for a move back down to there. If this risk-off sort of sentiment continues, the dollar's obviously benefiting from that left smile. Let's move on to Euro US dollar. Euro US dollar slid right below that 103.5 support. Parity is looking ever closer now. The RSI has still got some room to move before oversold concerns creep in. I think if we saw any rallies back in the opposite direction, I'd be looking towards this 104.7, 104.8, former range support now acting as range resistance. The euro is not looking good at the moment whatsoever. Let's go on to cable, which is holding up slightly better than the euro. But if we breach that 120 level, then obviously the lows around 119.4. That would be my next level to watch. On the upside, if we see a rally, 21-day exponential moving average, also back to here at around 121.5, and then the 50-day slightly above. But that would take quite a bullish catalyst to turn us back up there. RSI's got quite a bit of room to run before oversold fears start getting priced in. Euro GBP obviously fallen, big bearish candle on the back of pound holding up better than the euro. We got the 50-day simple moving average not far away. If we were to breach that, I think the next level is obviously the 0.845 200-day simple moving average. RSI has a lot of room to move lower, so we could see a bit of a push there. On the upside, 0.86 is the level to monitor. Let's move on to dollar yen. Dollar to yen, there's a bit of range resistance here at 137 and then some range support around 134.5, coinciding with that 21-day exponential moving average. Below there, the next real level of support's around the 50-day simple at 131.5. RSI is slightly above. It's at 60, so that obviously biases to the uptrend. Definitely one to watch. Aussie dollar, even though the RBA hiked by 50 basis points as the market expected, it sold off on the back of those growth fears, lower commodity complex prices, and that's obviously dragging the high beta currency lower. Levels to watch, 0.67 on the downside, 0.675. If we break that low around there at 0.676. On the upside, back to this 0.69 level will be the first test, I think, for bulls. RSI, bit of no man's land, but below 50, so downtrend bias in play. Let's look at commodity space. Gold continues to have this sort of slow bleed lower. The RSI has still got quite a bit of room to move low if we broke below that 1.8 key psychological level, 1.1775, the next level, 1.750, the next level below there. On the upside, 1.830 range resistance key. We've got that death cross. The 50-day simple moving average is below the 200-day simple moving average, so sentiment not looking good for the yellow metal. Let's move on to crude. We've broken out again above that range resistance at 115 and above the 50-day simple moving average, but now we're seeing the candle, we've seen sellers come in and push price lower, and we're hovering just below that range resistance and just above that 50-day simple moving average. Crude's got many different factors at the moment moving it both on the demand and supply side, but I think the dominant factor this morning's risk off, a stronger dollar and demand destruction at play. That's it for today's Technical Tuesdays. I hope you've enjoyed it. Rapid analysis. Join me next week. Thank you for listening.